that Bitcoin is correlated with monetary inflation, which is different than and precedes CPI inflation. And so during periods of rise in liquidity, either because central banks around the world are printing, or banks are making a lot of credit, or the dollar's weakening, because that's the denominator for global M2 in dollar terms. When any of those major factors are kind of prevailing, Bitcoin is usually doing quite well. And when the majority of those factors are contracting and global M2 is flat or down, that tends to put negative pressure on Bitcoin.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin. Lyn Alden says, as soon as you examine the historical price activity of Bitcoin. Of course, this won't teach you anything on a daily basis, but longer time. The main correlation it has is with worldwide broad money in terms dominated by the dollar. Then what is the overall value of it if you are at global M2? Valued in dollars, and since you are aware of the rate of change, what does the year-end figure of that seem like? It's just a means of stating that Bitcoin is connected, since it tends to be strongly correlated with something, with monetary inflation, which differs from CPI inflation and occurs earlier while rising in liquidity, either because banks are profiting greatly or because you are aware that central banks throughout the world are printing. Since the dollar serves as the denominator for global M2 dollar terms, credit is declining whenever any of those key elements are somewhat prevalent. Typically, Bitcoin is performing fairly well, especially when you understand the global M2 is, flat or down, and the bulk of those variables are contracting, which tends to place negative pressure on Bitcoin. Or at least that's what the demand side is saying, so I'd characterize it as over. The supply side is constrained during this bear market in that quick money from the previous rally, the market has mostly been saturated, and most of the coins have moved to wealthy individuals who can afford to buy them. The average in handlers. There's a tendency like that in naked markets, and thus, there's essentially a coiled spring there. In other words, there's not much liquidity for interested purchasers. That is, there aren't many coins that are sort of ready to change hands. However, the question then turns to what ignites the next surge in demand, and lots of things Lyn Alden discuss, so please watch the video to end. And share, subscribe our channel Everyday Finance. Thanks.
So, any sort of multi-month prediction is challenging. There's all sorts of things that can happen, but in general, I view a lot of risk assets, including Bitcoin, as probably being kind of range bound during that time period. I don't see a lot of new liquidity coming to market, but I also don't see a high likelihood of major crashes. But if you get a liquidity problem in the bond market, that's where you could get a pretty severe drop in some of these risk assets. When you look at Bitcoin price action historically, this won't tell you anything on a day-to-day basis, but on a longer-term basis, the major correlate it has is with global broad money in dollar-denominated terms. So if you look at global M2, what is the total value of it denominated in dollars? And is that, the rate of change, right? So what does the year-over-year figure of that look like? Bitcoin tends to be highly correlated with that. So basically, it's a way of saying that Bitcoin is correlated with monetary inflation, which is different than and precedes CPI inflation. And so during periods of rise in liquidity, either because central banks around the world are printing, or banks are making a lot of credit, or the dollar's weakening, because that's the denominator for global M2 in dollar terms. When any of those major factors are kind of prevailing, Bitcoin is usually doing quite well. And when the majority of those factors are contracting and global M2 is flat or down, that tends to put negative pressure on Bitcoin, so at least that's the demand side. So the way I would describe it is that over the course of this bear market, the supply side is tightened in the sense that fast money from the prior bull market has largely been washed out. A lot of coins have gravitated towards strong hands, people that are just dollar cost averaging in, hodlers. That's kind of a pattern we see in bear markets. And so there's basically a coiled spring there. There's not a lot of liquidity for buyers that want to come in. There's just not a lot of coins kind of ready to leave hands. But then the question becomes, what sparks the next wave of demand? And I think it will likely be the next rise in global M2. and I don't really see that as likely in, say, the next 1 quarter, 2 quarters. That doesn't mean you can't fluctuate. I mean, you could go anywhere up over 30,000. You could go retest 20,000. I don't really have a firm view on that level of range, but I think until it would probably, to see a bigger move, we'd have to see a pretty significant move in global M2. I mean, I think that would be on the more bearish side of what I see is likely. So it might differ moderately from my case. I probably would be a little bit more constructive on price than he sounds like he is, at least in that tweet. But it's fully within the range of outcomes because, again, I don't really see a lot of M2 growth happening over the next, call it 6 months. And so, other than maybe a spot ETF or something, that might be the other catalyst. It's just a wild card that we don't know if that's going to happen in the next 6 months or not, right? So that's a whole nother decision point. But just looking at putting that aside, I think we're kind of in this, kind of a stagnant range bound. At least that would be my assessment of the probabilities. I think that there probably would at least be a short-term pump. Whether or not that would have staying power, I think that's a good question. I don't think you'd see necessarily massive inflows right away. But the market, market participants would have to then adjust what the next bull market's going to look like if a spot ETF exists versus one that does not exist, right? So Bitcoin is not just buyers and sellers right now. It's also people looking out into the future and saying, what is the probability that this thing is going to be successful, right? So what does the regulatory clarity look like? Where are the sources of buyers going to come from? So overall, that is a new variable on forward expectations of price, which is for most participants would be pretty constructive. So I think that could give you either a quick bump or maybe a more durable kind of smaller, higher level to kind of stagnate around for a while. But I think where that becomes relevant, particularly, is if we have a spot Bitcoin ETF and then we get that global M2 rise, because then the spot ETF's there to absorb any liquidity that wants to come into it that doesn't want to go on chain, right? So there's plenty of capital in brokerages, in 401ks, in other types of environments that would probably make use of a vehicle like that. They've had kind of very limited vehicles so far. So I think it's a catalyst, and that could certainly move around price either to the upside or downside based on what news we get. But I think the more durable rise is likely to happen with the aforementioned global broad money supply. I think they both have different risk profiles, right? So with GBTC, you have to worry about the having a persistent discount to NAV, the possibility that it's not going to be converted to an ETF anytime soon. Just that kind of ongoing challenge. Whereas MicroStrategy, you have to assess an operating company and then you have to assess their financial leverage. So I consider them somewhat different vehicles. MicroStrategy technically has positive carry. I mean, it's a profitable business, but you do have to factor in the financial risk there. So I don't really have a strong opinion between the two. I like to diversify a little bit. I do think the cleaner vehicle overall would just be a spot Bitcoin ETF. That would clear up a lot of problems with having Bitcoin in a portfolio, because GBTC has been a flawed product. The futures ETFs are flawed products, and MicroStrategy I think is a good product, or a good company, but it's just a very different risk profile than just owning actual Bitcoin. So I would just put that in kind of a separate camp. The same thing with the miners. You're taking on operational leverage, which gives a very different risk profile.